Hi everyone, welcome to this week's market forecast for the week ending March 12th, 2021. My name is Justin Bennett with Daily Price Action, and in today's forecast, we're going to look at the euro, the pound versus the yen, gold, and Bitcoin. Bitcoin has been pulling back recently, but I'm going to show you what I'm watching there for a potential buying opportunity over the next 48 hours. So we're going to get to all of that in today's video, so let's get to it right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. So first up is the EURUSD, and I wrote about this one on Friday. As you can see, the pair did retest 119 after last week's big sell-off. So in the last forecast, we talked about this ascending channel here on the daily time frame. And I noted how the 120.70 area was support, which meant that any close below that area, this region between 120.80 and 120.90 would become resistance. And sure enough, that's exactly what happened. We saw a nice sell-off from that area down here toward 119, which was about a 180 pip sell-off. So now that the pair is retesting 119, and it might not look like much from the daily time frame, but if you look at the weekly, this 119 area has been critical for the pair over the last few months. Notice on the weekly, 119 was the range top back here before the EURUSD broke out. And of course, that area just above 116 was that range bottom. So basically for the week ahead, 119 is going to be support and 120 is resistance. Notice how 120 was this low back here and it's also this high. And we've been looking at 120 a lot recently as this false break right here signaled the move higher. But now that that's exhausted itself, we are looking for a move potentially below 119. However, just keep in mind that we could see a bounce from this area early this week, perhaps back toward 120, which I do expect sellers to defend that area as resistance. So it is going to take at least a daily close below 119, preferably a weekly close, in order to put the EURUSD back inside of that weekly range between 116 and 119. Now, there's also a larger ascending channel here. Depending on how you draw it, the bottom of this channel lines up exactly with last week's low. All right, so there's our top level, and you can see that the bottom level lines up pretty close to where last week closed. Now, we are looking at the weekly time frame. All right, so anything here could take some time to play out, but notice how if we draw the upper level across these highs and the lower one using this low down here, it does appear that the EURUSD closed below that level. All right, so if we move into the daily time frame, let's see if it offers any clues. So there's the level, and on the daily and the 4 hour, it does appear, notice right here, see these wicks? It does appear the pair closed below this area. All right, so we may not see a full move back toward 120. We may only get a move back toward the 119.50 area this week before we see that move lower. But either way, I do expect the EURUSD to lose some steam over the coming days and weeks, even though technically the pair is still carving higher lows and also higher highs. The structure, at least recently, unless it can climb back above this level and also 120, the EURUSD does look pretty bearish going forward. Next up, we have the pound, and last week I mentioned how the pair had broken back inside of this ascending channel. So this right here looked to be a false break once we got this close right here. So once that happened, 139 was support. And if I move in, you can see where 139 did support the pair last week, but buyers were unable to hold it. Okay, so this area right through here was support. Thursday closed below it. Friday found resistance right at 139 and started to move lower. Now for the week ahead, of course, this low down here looks like it supported the pair into the weekend, but I do expect a retest of that 137.40 area, which as you can see was resistance through this region. So 137.40 is going to be support, 139 is resistance. If the pair can close back above this level, we could see a run at this channel top. However, I think the more likely scenario is to see a retest of 139, a rejection from that area, followed by a move down here toward 137.40, which could also mean a retest of that channel support. So like the EURUSD, the pound has been pretty indecisive recently, but I do think just playing this range right now, that's the best way to go because of the lack of direction. Right now, the pair is pretty much sideways, even though we are within this uptrend. So again, 139 is resistance, 137.40 is support. So the pound yen is a completely different story from the pound versus the US dollar. I talked about this weeks ago where we had this breakout from the broadening wedge. Okay, we're here on the monthly time frame, and you can see where we had the breakout on this candle. That's when I was talking about it, and I said that the pair looked ready for at least a 500 pip move higher. Now the reason for that, you can see this long-term trend line that intersects with the 155 horizontal level. Notice how key it was back here. So I do still think that the pair is headed toward this 155 region. And so far it's up about 500 pips as of Friday's close. So looking at the daily time frame, I talked about this last week, but really the pair has to get above the 150 handle on a daily closing basis in order to expose 152.80. You can see how Thursday failed to close above that. That's when I was talking about it. And I said we needed a daily close at 5 p.m. Eastern above 150. It failed to do that, which also confirms the significance of this 150 area. However, the uptrend here is very much intact, so buying with the trend is the logical choice in my opinion. So that means either buying dips or waiting for that daily close above 150. Just keep in mind that if you do wait for the daily close above 150, there's no guarantee we see a retest of 150 as new support before the pair moves higher into that 152.80 area. And of course, beyond that, a daily close above 152.80 should expose the 155 region. If we do see a deeper pullback this week, keep an eye on that 148 area. Notice how it was support back here and before that resistance. All right, so 148 is going to be support and 150 is resistance. We need a daily close above that to expose 152.80. Gold, or XAUUSD in this case, is at a must-hold level for buyers. I talked about this last week and again last weekend, but this 1680 level, notice how it was resistance back here and then it flipped to support. All right, it's also the bottom of this descending channel. So we have confluence there around 1680. However, as I talked about last week, it's also a fib level. So if we look at the March low, this was the March crash back here, and the March low up toward the 2020 high, which was also the all-time high, you can see where the 61.8% fib lines up right around 1680 as well. So we have a horizontal level, we have the bottom of this descending channel, and we also have the 61.8 fib. So there is a lot going on right here at 1680, and that obviously doesn't mean that the pair will hold this level and bounce from here. However, it does mean that buyers have to hold this level. If we see the pair close below this area over the next 2 weeks, that would be very bearish for gold. It has to hold 1680 if it has any chance of moving higher in the short term. And as I mentioned last week, you can see where the 1750 region is also going to be critical. Okay, so if we see a bounce from 1680, I would look toward the 1750 region as the first level of resistance. Beyond that, of course, you could also use this 38.2 fib, which should line up with the top of that channel. All right, somewhere right around 1830. But first, we have to see some type of bounce from 1680, followed by a close above 1750. Now, if we do see a close below 1680, that's not something I would personally trade because there is a chance that could be a false break. Anytime you get a downward break from a descending pattern like this, okay, the channel is descending, a lot of times that turns out to be a false break. So if we do see a daily close down here, you have to be really careful with trying to short that because we could get an immediate move higher and close back above 1680. So either way, this is one to keep a very close eye on. 1680 is a must-hold level for buyers, and 1750 comes in as resistance. And last but not least, we have Bitcoin. And this one has been very interesting over the last few weeks because the correction here has been very similar to what we saw in January. So this correction here looks very similar to what's happening right now. The only difference is that my opinion is that we still have one more pullback, if not two, before this correction is over. Now, the good news is that doesn't mean that we see a new low. In other words, this low around $43,000 could be the low for this correction. But I do think we see another move down here into the area between $43,500 and $45,000. And the reason for that is really twofold. So one, we need to see a retest, in my opinion, of this trend line. And that area right now is right around that $44,000 area. However, what I really like here is a lot of times Bitcoin, even though it's the largest crypto, it doesn't always give you the clearest view. So for that, I like to go to the total market cap. So this shows the total market cap across all cryptos. And as you can see on the daily time frame, we have a very nice ascending channel. All right, this is one of the best ascending channels I've seen in a while. And the one thing missing here, this was the January correction. All right, the one thing missing right now is a retest of this channel support. Now, of course, there's no guarantee that we do see that, but so far, the way that we got this peak back here, and notice we had this peak right here, we moved lower, retested support back here, we moved lower, retested support. However, the one thing we got was a retest of this channel support. In fact, we almost got it twice where we had this low down here at the range low, and then we got a proper retest of channel support. So I think we could see something similar over the next few days where we get a move lower, a retest of this area right around $1.3 trillion, a move higher, but a lower high than this one back here, and then another run at this channel support before we move higher. All right, that would mimic this consolidation back here. Again, there's no guarantee that that happens, but I do think there's a good chance that it does. So we'll see what happens, but I am anticipating a move lower before we see the next push higher. But all in all, later this year, as I've said many times, I do expect Bitcoin to be much, much higher, as in above $50,000 and $60,000 and even above $100,000. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.